Here at Talk Tickers, we absolutely love a good puzzle. And boy, is CrowdStrike's latest quarter a great one. You see, they just reported record numbers, a true monster quarter by pretty much any measure you can think of. So why on earth did the stock immediately drop? Well, that's the great divergence we're going to decode today.
Okay, so let's just break this down for a second. CrowdStrike delivers these fantastic results, and you can hear the triumph in management's voice. But then, in after-hours trading, the stock just gets hammered, dropping 8%. So what gives? What did the market see that all the headlines missed? Let's start with the good stuff, the bull case.
All right, first up, the bull case. Management actually called this a re-acceleration, and they said it happened to a full quarter ahead of schedule. And you know what? When you look at the data, it's really easy to see why they were so confident.
This number right here, this is a huge deal. It's the net new annual recurring revenue, or ARR. For any subscription business, this is the absolute lifeblood of growth, and CrowdStrike just posted a record. I mean, it blew past expectations by double-digit millions. This signals that their growth engine wasn't just running smoothly, it was actually picking up speed. And the execution was just clean across the board. This wasn't some kind of mixed quarter. It was a solid beat on revenue and a massive beat on earnings. Their non-GAAP EPS of 93 cents just crushed what analysts were expecting.
So you might be asking, where is all this growth coming from? Well, it's all about platform consolidation. Just look at this. Nearly half of all their customers are now using 6 or more modules. This is proof that the platform is super sticky. Clients are actually dropping their smaller vendors to put all their security spending with CrowdStrike.
And the momentum was just everywhere. Their Falcon Flex licensing model blew past 1,000 customers. Their high-growth cloud and Next-Gen SIEM, that's their big security event management platform, are absolutely on fire, growing 35% and an incredible 95% year over year. And, as if that wasn't enough, they generated a record $284 million in free cash flow. Just wow.
So, with all of that incredible news, why the panic? I mean, it doesn't seem to make sense, right? Well, the answer wasn't in the results they just posted. It was in the forecast.
And here it is. This is the crucial point. For all the success they just had, Wall Street is always looking forward. And when CrowdStrike gave its revenue forecast for the next quarter, well, the high end of their own range barely even touched what analysts were expecting. That slight miss on the top-line outlook, even with strong earnings guidance, that was the trigger for the sell-off.
Now, a key reason for that softer forecast is this number. The company expects to see about $51 million in cash payments next quarter, and it's all tied to that big Windows outage back in July. We're talking customer retention incentives and partner rebates. Totally necessary investments for sure, but a clear headwind in the short term. This quote just sums up the market's reaction perfectly. It became a classic case of, yeah, that's great, but what have you done for me lately? The record-breaking quarter was almost completely ignored in favor of this perceived weakness in the immediate future.
Okay, so now we have the bull case, which is built on just stellar execution, and the bear case, which is all driven by a softer-than-hoped-for forecast. So let's put these two together and really decode the divergence between how the company is performing and how the stock is reacting.
You know, while the market was fixated on next quarter's revenue, CrowdStrike was playing chess. They made a major strategic move, acquiring a company called Onum. Now, this is a potential game changer for their CM platform. Onum's tech lets them process security data way faster and cheaper, which could give them a massive architectural advantage over their competitors.
So here it is, the great divergence, all on one slide. On the left, you've got the market's narrative. It's all about those temporary headwinds, the outage costs, the partner programs, and the softer Q3 timing. But on the right, you've got management's narrative, and they're focused on the fundamental long-term strengths, that accelerating ARR growth fueled by AI, the strategic power of the Onum acquisition, and deep platform adoption. So here's what to watch going forward. First, that Onum integration. Can they show some real tangible wins there? And second, the big one, can they actually hit that super aggressive target of 40% plus net new ARR growth in the back half of the year? If they can hit these marks, believe me, the long-term story should quickly overshadow all this short-term noise.
So what does this all mean for the stock? Let's pull it all together. Here is our official analyst-style take on CrowdStrike after this earnings print.
We are officially assigning an outperform rating. Look, We believe the market has completely overreacted to what are clearly transient short-term headwinds, and we think this has created a really compelling opportunity for investors who can look past the noise of the next quarter and focus on the powerful underlying fundamentals of an accelerating AI-driven growth story.
And now for our outrageous but plausible trade idea. If you share our conviction here, you might consider buying call options with the $450 strike price, expiring about 6 months from now. The thesis is simple. The market is pricing in the short-term fear, not the long-term reality. As CrowdStrike executes on that 40% ARR growth target and proves the value of the Onum deal, we expect a significant re-rating of the stock. These options give you leveraged exposure to that potential rebound.
And as always, this analysis is for informational purposes only. It is not financial advice. Please be sure to conduct your own due diligence.